Good morning. It's Vince Lanci, 8 a.m. This is the Gold Fix, and it is the day before Thanksgiving in the U.S., otherwise known as Thursday in the rest of the world. Gold doesn't take holidays, um, so we'll probably have a move while you're sitting down eating. Dollar's a little lower today. Gold is slightly higher. Silver is almost 1% higher. So, is silver holding gold back, or is silver dragging gold higher? Well, if you look at the other precious metals that are also used in industrials, you'll see that they're all stronger, uh, from copper to palladium, and the yuan is lower. That means it is stronger against the dollar. Uh, we maintain that the yuan will have a uh, strong peg and correlation going forward, and there's opportunity, we think, in an arbitrage there, trading a channel or trading a range on that. Uh, Although we haven't optimized our own uh, system on it yet, we're not sure if we're going to trade it as a regression model. But anyway, we'll come back to that. Rest of the currencies, the Aussie is a little bit up today after performing as it should have. Uh, of note, if you remember yesterday, actually, why don't we get to let's look at the current gold chart. Okay, there's the hourly gold. Look at the daily. All right, so gold is uh, again in no man's land, but stable. Gold had every reason to be lower yesterday, and it wasn't. So let's discuss that. All right, that's for the pulse. All right. Okay. The comments and stuff here is sparse. We'll do most of it with words, and that's because I was putting together another post, which is up there. Okay. Gold had zero reason to be up, but it was. Yesterday, the dollar was stronger. Stocks went to zero. And uh, there's just no reason to buy gold when that happens. I'm not saying that it won't go up in a knee jerk reaction from time to time when stocks swoon like that, but usually it ends up going down by the end of the day. Usually, again, this is my opinion. 30 years of trading and observation. If not yesterday, it should go down today. However, the dollar was super strong yesterday as QT continues to drain liquidity from the market, which in turn, uh, from time to time, will affect the U.S. stock market. And gold had zero reason to be up, but it was. So, um, what we're thinking about is either gold is going to, well, I'm not married to either way, but gold is going to correct lower. Um, or underperform if the dollar rallies. That's a regression to the mean feeling on gold. Or, and I think this is more likely, although it may not be long lived, you're seeing a revaluation of gold versus paper fiat. And by that I mean, uh, uh, whatever the reason, uh, people aren't. Maybe there aren't a lot of longs in gold now. People aren't really selling it. Uh, you may actually have shorts in the market that are covering. There was selling in gold yesterday. Don't get me wrong, but it was absorbed. So there's buying in gold, and I think this could be the buying. It could be people getting ready for allocations for the new year. That's a mechanical or cash flow comment. The buying could be related to truly putting a little bit of money in diversity, doing what you're supposed to do and put a percentage of your assets in gold, uh, uh, 5-10%, depending on who you're talking to. uh, I would say more, but that's it's based on math actually, but I'm not going to share that right now. um, every hedge fund manager is calling for a recession, and at the same time they're saying debt is the problem. Dalio, all those other guys are saying that, and those are marketing tools for managers. And I think, that, put it this way, as much as I want to stick with the regression to the mean that I think gold's going to come off, I think at least in the short term, if gold didn't sell off yesterday, then uh, if Powell were to back off the QT concept, which I don't think he will, but I have to acknowledge that he could, gold will probably rocket along with um, stocks should something like that happen. Uh, so gold could be entering a Goldilocks phase. I wouldn't call it an era yet, but I don't really think there's many people left to sell it. But what's in the market right now, people are starting to discuss more aggressively that Powell will lower his uh, aggressiveness in raising rates. But here we go. All right, so today the weaker U.S. dollar and gold is up a tad. The won peg revisit, refined, and reassessed. Uh, let me go to the chart on that very quickly. I threw the charts in here, and I didn't put the won chart in there. Okay, well, it's not easy to set up. So what we saw, if you remember, about a week ago, maybe 2 weeks ago, uh, the yuan was tracking gold nicely on the down move and had been for a while. And then when gold popped, we were looking at right around. Oh, there it is. Actually, it is there. Here we go. I do have it. Still we're still relearning this blog model here. All right. So the red line is the yuan. You're better off having a channel, to trade, to look at the channel range. But for this, I just like to do this for now. Um, you'll see that we had uh, a divergence about. This is a daily about 3 weeks ago, and I said that gold would come off or the yuan would rally, and they both did. If you look at the area about 15 days ago where the light line comes down, and then gold continued to come off, and so they touched, and then now gold is up again, and the yuan, although the slope has turned up, it has a ways to go. So either the currency gets a lot stronger if you're playing this game, or the gold comes off, or yeah, you can't look at the line where I'm drawing it as being a tracking line. I look more at the slope than I do. It could be very well that you take this line and you just raise it, and you'll see that the shape mirrors gold higher, and that it had been trading under. It depends on your time frame. If I sound a little confusing, that's because uh, I'm not really interactive on this picture here. But if you take the whole red line and you raise it up, you'll find that the last section of it will line up nicely with gold's behavior. So I'm not saying that gold has to regress to that line. It may have to if you're looking on a weekly basis, but it doesn't have to on a daily basis. That's why you need channels, which we'll create for next week. Anyway, back to the note. All right. Trying to trade jawboning. Don't hold your breath. Don't hold your breath, I guess. Uh, Yesterday was an important day, especially for stock traders. We've been talking about this for a while, and I think we've been on top of it. That the good cop, bad cop concept. Now, Kudlow is no longer the bad cop. The bad cop is who is the bad cop? I don't even know anymore. But Kudlow is not really a bad cop anymore, and Trump is speaking less and less publicly about it, and that's because I think his effectiveness is waning, and there are some people that have brains there that are telling him what to do. But when Kudlow comes out and says what he said yesterday, we're optimistic. These are all generalizations and vague statements that mean nothing. We are. I can't remember the quotes, but I think I retweeted them and put them on the chat. But it really comes down to using words like very, a lot, big, really. Those are meaningless words. Those are words you use when you don't know how to quantify. We think that China really wants to do a deal. Well, that's what you think, and can you put really on a scale? And the last time they did that, the market rallied off of it. Yesterday, it didn't matter. Two takeaways from that. One is this round of uh, jawboning or trying to talk the market up, like the Fed does when they're testing waters, didn't work. Uh, so which leads me to two, and this is an opinion, but hey guys, China is not the reason that stocks are down. And I think the market knows that. It's the drainage of dollars. It's QT. I'm not saying that QT is evil. I'm saying that QT is taking away liquidity needed to support uh, the market. And so while China jawboning may have helped once or twice, it's not going to keep helping unless maybe you actually have a deal. My fear is that he's actually going to have a deal and no one will believe him. So the point is, uh, uh, intervention only helps in the direction of the trend, and Kudlow's words had little to no effect on the stock market, and the dollar kept rallying. The market is now testing Powell the other way, saying we're going to keep. If you want to look at it that way, if you want to anthropomorphize the market, which I guess it is uh, uh, a collective consciousness. The market is saying, either you back off on QT less aggressively, or we're going to keep dropping. You know what? I don't really think he's going to back off, uh, and I'm not saying that he won't, but I don't think he will. So, Powell pressure, why he won't give in? All right, I don't think he'll give in because he looks at the math, and the economic numbers are different than the stock numbers. You can read the economic numbers any way you want to and come up slow economy, not slow economy. Uh, but he does have cover now. And by cover, I mean he does have an excuse, a way to save face and change his mind. And that is tied, in my opinion, to oil prices. If he had been raising rates because of a fear of inflation, and we no longer see the economy at its top or possibly turning a corner, and oil's significantly lower, then he has cover to say we're going to be less aggressive. So if you're playing the whole interest rate speculation game, they're going to raise in December. That's almost metaphysically certain. And next year, look at the futures, the Fed futures. They're reducing the amount of times that they'll raise. The perception is that they're going to be raising less, and that may be true. But I don't think he's going to do anything before the end of the year. Take your tax losses if you have any, and see what happens next year. Okay, technicals. All right, number. So the range basically is, if you look at what I'm looking at, 12, 20, 8.5 to 9.5 on the upside, 12, 20, 60 on the downside. Now that's plus 4 tenths of a tick per hour. So it's an upward sloping line he has on an hourly chart, starting at 820. So those are your ranges today to look at, to break in and out of. Uh, Keeping in mind that I have been wanting to get long on breakouts and getting stopped out. On my very tight stop situation. I got to wonder what's above 28 and a half, if there's some stops above there. But above 28 and a half, he has 37. These are numbers that you've seen already. You can look through them again. Here's the charts. Okay, there's the yuan versus the weekly. And this is the weekly vol system. Uh, I think in about a week or two, we're going to have something. The 4 hour, actually, we'll just read the words. The 4 hour is on the radar and it'll likely hit during turkey carving. Weekly is setting up, 60 minutes, nothing. Today, note how emerging markets and Aussie dollar behaved with strong US dollar yesterday while gold didn't budge. We talked about that already. Either we get delayed reaction or specie is being revised versus paper upper again. Specie, for those who don't aren't familiar with that term is an old term to describe um, money made of precious metals or metal to be broader. Um, okay, there's a big section here that I added on um, that describes from an FX trader's point of view by continent and the stock market. I would recommend people read it. Uh, it's very good. It's also something you can read in the morning along with our morning report uh, when I put it out here. Uh, And even though it expires and it's ephemeral, it's not that important, say 2 hours from now, there's still something to learn for. He's very politically savvy, this guy. Here, the Australian dollar tested support near 72. 20-day moving average and bounced higher. It and New Zealand dollar are leading. Okay, so there we go. That's that. That's that. Europe. All right, what I want to talk about now is uh, what might be more fun to talk about, and that is options. Okay, this is a story that I wrote uh, on I guess anonymously for Zero Hedge in, I don't know, it might have been 2009. I'm not sure. But Tyler put his own title on it. Second whistleblower emerges. This, if you have any interest in learning about options and learning the evolution or education of an options person, I would recommend you read this. This reads very option wonky. I basically wrote it um, in bullet form and described how an out of the money option that expired worthless almost cost me my career. And uh, that was an example of uh, well, it's actually a very good story. Even though it's told very dryly and matter of factly. So here we go. Here's the gist of it. In April 1994, I bring this up because of the selling of options and all that stuff. And this is one of those war stories that you tell your grandkids, but it's relevant every so often, and it's not something that can happen now. In April '94, the Thursday before Easter, trading day ended with a rather unusual run up of 15 cents near the close to finish at 4.35. That's silver, $4.35. The market closed at noon. So um, Thursday before Easter was the close. The market wasn't open on Good Friday. Then you had Saturday, Sunday, Easter, and Monday close. So the markets are closed for like 3 4 days. And the options go off the board, however, um, at 4 p.m. Even though the market closed uh, around noon. So you have 4 hours of gamma scalping. But this option was this 450 strike was way out of the money, and 15 cents is a lot from 435. So we left. It was a 4 day weekend. Um, I'm at the airport, my first vacation in some time, and the rest of the story is the education of an of a person who understands nothing, who doesn't. What's the expression? Know what you know and know what you don't know. And the third thing that makes Rumsfeld sound like an idiot, but he actually is right. Uh, uh, know what you know what you don't know, and then there are unknown unknowns. Basically, what he's saying is that's a nice way of saying there are things you haven't even imagined yet. Well, this is an example of a thing that I hadn't imagined. Out of the money option, destined to expire, worthless, and no one is there. And so someone, uh, someone related to the Phillip brothers, starts buying, lifting the dealers between the close and uh, the rest of the night. The market gets up to 460. And 4 hours later, my options that were out of the money are all expired out of the money, but are exercised out of the money. They're exercised out of the money before the futures were bought. So the market settles at 435, and some idiot, at least I thought they were, exercises a call that's out of the money on a 4 day weekend when there's no liquidity. And he basically bought he basically bought futures 450 when it was 435. Um, my response, I think, is actually very funny. Uh, uh, my backer called. He says, someone exercised the calls. I scoffed, thinking it was a retail sap and was talked into exercising some 5 lot piece by an overzealous broker. Great. I said, let them. The options are out of the money, and I hung up. 10 minutes later, he called me back again. This is a dear deceased friend of mine, Chris Barone. This man was a brother to me. You don't understand. It's fiber exercising. Now, uh, I was an options guy. I wasn't a physical market guy. Again, I naively said, so what? They're energy guys. Psh, you know, nobody knows more about options than me. These guys are idiots. But I was curious, how many? I asked. All of them. 5,000. That's not a lot when you think about it, but it was a lot then. And it's a big contract. 5,000. So now I'm really curious, but I'm still ignorant. And why would they do that? Now I'm asking myself, why would they do that? And I basically almost vomited in the cab back from the airport. Anyway, the point of uh, this is about the time when Warren Buffett came in to rescue Salomon Brothers. If you remember, from the bond disaster they had, manipulation. And Warren Buffett wasn't involved in this cornering of silver. This is '94. He went in and he rescued Salomon Brothers. He white knighted them, and fiber was owned by Solly, and he stepped in and overnight stomped on what they were trying to do, which was fill an order for a customer, and then at the end of the order, uh, uh, have a great VWAP, and then they were long some calls. We're going to make money on it. This is actually a good read. It's a hard read if you don't understand options. But what I learned is uh, important, and there's a lot that you don't know. Uh, for the next 4 years, I paid attention to how those dealing banks and fiber played the markets. It was all about gamesmanship, basing your probability, and knowing your counterparty's motivation with these guys' information. There's a lot of stuff in here how people manipulate markets. Let's put it that way, or how you can be manipulated. '97, Buffett comes back in and he corners the market, and it is manipulated. I don't care what anyone says. I even know who the advisor was to him, who shall remain nameless, who also denies that manipulation even exists. That's bullshit. Um, uh, I bring this up because Bryn uh, and I joke about contango and backwardation and things like that. Well, here's what happened in '97. We only have 2 minutes left, but I want to give you an idea. In '97, Warren Buffett bought all the silver he could. And in '97, his executing broker was Fibro. So, but they didn't do anything shady that time. So what ends up happening is, uh, and I can't verify this, but the behavior tells me that's what happened. It walked like a duck and quacked like a duck. So he decides he wants to stand for delivery. Now, the details you can learn about that by reading the rest of the story. What ends up happening is he doesn't take delivery. He says, you know what, guys, I won't take delivery. And who was short all the silver? Producers that were dying on cash flow. So they were over hedging and relying on borrowed silver. So he says, you know what? Silver's trading 450, let's say. Let's say it's trading 450 from front to back. So from spot to a year out. And when he announces he's taking delivery, the market screams higher. And then he says, you know what? I'm not going to take delivery. I'm a nice guy. I'll loan it back to you. So he takes all the silver he bought at between 375 and four and a quarter, and it's trading 740-ish. Well, the important thing is spot was trading 740 and 1 year out was trading 450. It was like a 40% difference in price. And he loaned them their own silver back to them for a 40% rate of return on top of the money he made from the directional move, on top of the fact that he did it on leverage. It was a tremendous trade. And even though he got out when silver was trading $8, like 4 years later. So you can read the Here's What Went Down thing. This is how manipulation happens. I'm not saying Warren Buffett manipulated the market. I am saying when a market gets lopsided, I'm pro this type of behavior. When all the producers are in one side of that boat, when everyone's long Apple, you may not know when the tipping point is, but if you have the muscle, you tip it. And this is what happened. I really strongly recommend people read this to get an idea, because this is important for retail people. Uh, uh, and I say that because in the last thing, uh, this is written in like 2009 or 2010. The Wall Street salesman players with access to both markets, retail. This is when ETFs were being created, and I called this as a problem for markets. And you know what? I was right. Uh, uh, you have to be careful. You have to understand. Like I talked about the UNG, um, the role of these products and how the contango kills you. And the last thing is, instead of making $1 million from a hedge fund, meaning Goldman Sachs or Bullion Bank would take on a hedge fund and stop them out. These guys now take $1 from a million people now. So that's what the ETF is all about. Anyway, it is 8:24. The roadmap with Larry. Please stay tuned. And if you don't know what the link is, uh, follow OpTrader1 at OpTrader1 on Twitter and ask for the link for the AM roadmap. Great move yesterday, and a lot to learn. And I think for active traders like Larry and myself, I haven't been as active lately, but the day after the disaster is great for the swing trading. People like Tracy and Brink can attest to that. I'm going to let you go, but you know, read this because it's a timepiece, and I wrote it for Zero Hedge, and I don't think they care. I don't think Tyler cares. I've got a decent relationship with the guy, but this is how he wrote it. But I just put it back on our site. Um, it was a great story. It was fun. It was fun to write because I was so nervous. I did it anonymously. I was worried I was going to get arrested or something for divulging information, and that's how far we've come. You know. So anyway, 826. Let's look at the market. Gold is trading 1224. That's the if you're looking at the difference between cash and if you're trading a cash market, cash plus 60 cents equals December, give or take. That could change a lot today. So gold is trading 1225 and a half ish right now. And the dollar is down and steady. Please have a good day. Consider this Friday follies. Maybe you'll get some short covering because even though it's not Friday, it's a less liquid uh, next couple of days. So be careful of the moves today and enjoy yourselves. Have a great day. Thanks.